Well, for more on finance, we're joined in the studio by Rod North, who's the Executive Director of Bourse Communications. Thanks very much for your time this morning.
Good morning.
Now, no one's tipping that the RBA is going to move on rates. What do you make of the CFMEU's call?
Well, I think, look, there's been lots of talk in recent weeks. We've had, some pretty powerful groups and also individuals coming out. Recently, of course, Solomon Lew made the point he thought that the cash rate should come back by 75 basis points, but he's got a bit of a retail agenda there. But clearly, manufacturing, retail, exports is being affected by a combination of a high dollar and probably rates that are probably a little bit high, with the cash rate at 4.25%. We're in a bit of a deja vu situation because back in February we had all the economists surveyed, 24 out of 24, and then again 18 out of 18 that Reuters surveyed, all saying then that they felt that rates perhaps should come off, and they didn't. In this case, they're saying the rate should stay on hold. So I think the general consensus is that rates will come down at some point, probably by 25 to 50 basis points over the next few months. One of the key issues is really looking at the data that's ahead, and this month we've got the inflation data and also the employment data coming out in April. So I think probably with some prudence the Reserve Bank will be waiting for that, because that's official data, even though yesterday we had unofficial data out by TD Securities showing that the inflation rate from an annual rate is only 1.8%. So it's within, well within the bands of the 2 to 3% that the Reserve Bank wants to see inflation at. So that gives a big tick to the potential for rates to come off, but we really have to wait and see.
And of course, if the Reserve Bank does cut rates, we could again see the major banks raise rates as they did last time, and they're copping a bit of stick from disaffected borrowers, aren't they?
That's actually, I think, the big issue too, because we've got a situation now in Australia where the four major banks own 90% of the mortgage market, or have controlled 90% of the mortgage market. Back in 2007, that was 65%. So the GFC has really made our major banks very powerful in respect to what they can do. So the big issue is, even if rates come off, the banks have shown us that they may either not move the rates or move them up. But what we've seen is a number of credit unions are now becoming banks, and we saw the Teachers Mutual Bank become a bank just recently. It's a former credit union. It's the third largest credit union in Australia. It's now the sixth mutual bank in Australia, and there's been a lot of switching from other banks because people can do that now because there are no switching costs in the main, and of course they're switching and getting a 25 to 27 basis points difference. So a bit of competition is probably healthy. So that's going to be the trend. That'll be the thing to really watch, I think, over coming months, because there's also been quite a few overseas banks from Asia looking at Australia as well, but their issue is distribution. They've got to be able to distribute here.
And how's the market looking?
Market's looking good today. We've had Wall Street up 55 points, so futures are showing our market should be up 30 or 40 points. So we might have a bit of a Easter rally on our hands, which would be a good thing to all those patient share investors wanting to see the share prices go up.
That's very exciting.
Let's keep our fingers crossed. Excellent result.
Excellent.
Oh, OK, we'll just leave it right there. Thanks very much, Rod North.
Thank you.
Now, coming up, we'll be speaking to the former WA Premier Jeff Gallop.